Moving on, let's talk about the sell-off that's happening in the commodities. What's the way ahead with Peter McGuire, who is the Chief Executive Officer at XM Australia. Good afternoon, Peter. Thank you for joining us on ET Now. I'm Cheryl, along with my colleague Pankaj. I'll first begin asking on the commodities, what we're seeing currently. We know that there is a slowdown in growth in China. You also have the Fed taper talks that's actually started once again. All of this is adding pressure to the commodity market. Do you see this actually going ahead and becoming much more a full-blown issue for the commodities?
Well, good afternoon. I think a couple of things also is the apprehension of the market due to what we're expecting next week in Jackson Hole. Also, one needs to be conscious, less demand and less liquidity. Many traders have taken their chips off the table and everyone's gone short crude, energy and base metals and foods. So it's been a dynamic time for trading in the last couple of weeks. And of course, you've had a very strong move to the upside, or relatively strong, for US dollar index. So put it all together, I think it's a time to take profits, and it's been a very nice time to be trading.
Right. You know, what is the sense that you get as far as the overall this tantrum word is concerned? Do you think markets are overreacting to every time the news flow is coming, or whenever it happens, whether market knows it or not, there will be an excessive sell-off?
Well, I think it gets to a point that it was probably overbought. There was so much momentum to the upside for crude, for base metals. Everything was, an iron ore. Everything was Christmas every day. And yesterday's price was going to be beaten by today's. And so, in turn, it just ratcheted up. So there was a point in time that it becomes exhausted. Those big moves are counterintuitive, but everyone just went short. And I think by copper being under 9,000 a metric tonne, it's really demonstrated how quickly the markets have corrected to the downside. So that really, I think, has taken everyone by a little bit of surprise. And also, don't put our mind, we can't escape from the reality that, there's still this COVID concern that hasn't gone away, and that's created, again, another level of angst to the market, as demonstrated with the Royal Bank of New Zealand this week. Reserve.
Right, Peter, and like you mentioned, there's this overhang of Delta. On back of that, you have concerns about demand as well. We've seen what's happened to crude. Today, luckily, it's snapped that 6-day losing streak. But what's the way ahead for the crude as well as for gold?
Well, I think gold's got possibly more upside. I'm thinking that, whilst you've got a rising US dollar, it's been whipsawed in the last week and a half. 2 weeks. Last Monday week, it went down to, it dropped nearly $100, and then it was at $16.90, and it's ratcheted back up, to $17.80, $17.85. So there's the storyline there. The other side that needs to be considered is that the crude market, it may drop another dollar or two, but I think the majority of the market has really absorbed this big correction. And I wouldn't be surprised that maybe another dollar or two, but I don't know whether it's going to, capitulate further from here. It's already down probably 16, 17% in the last week and a half to 2 weeks, or 2.5 weeks.
Right. All right, we'll leave it at that. Thank you, Peter, for joining us on the show, talking about the markets, crude market, be the commodity market, as well as gold in particular. That was Peter McGuire of XM Australia.